Hey guys, this is Karthika Kantwal from Apex FinSoft, and I'm back with the final installment of the Wyckoff series, the distribution and accumulation series. If you have seen, you might be familiar with these terms now, the market phases and all of these things. Now we'll be discussing, or not discussing rather, but we'll be looking at a couple of chart examples of all these theories that we talked about the last time, or even the time before the last time. Since 2 weekends we have been looking at Wyckoff. We had introduction, then we had identification, and today we look at the results of how these phases actually act out. But before we move on to the charts, I'd like to briefly walk you through once again of everything that we discussed. So basically the entire Wyckoff theory is built around three laws, that is the law of supply and demand, cause and effort, and cause and effect. That typo again coming into play. It is cause and effect. The third one is effort and result, effort versus result. The first law, very simple, the law of supply and demand. Everything in the general economy works according to that law. If the demand is exponentially growing over the supply, then the prices tend to rise above and higher. You can observe this effect more or less everywhere. The opposite goes for when the prices are falling, the supply is amply morely is available a lot more than the rate of growth of demand. The second is cause and effect. If you remember, I told you guys, Mr. Wyckoff said that these imbalances between supply and demand don't just happen by their by random. That is all driven by cause and effect. So cause is generally the sideways period where the demand is growing or the supply is growing, and the effect is the result of that cause itself. Then you had effort versus result. Now he also said that jitna strong cause hota hai utna effect aata hai, but there was a way to measure that through the effort, which was visible through the generic trading volume. So these three things, so the entire Wyckoff theory is built around these things. Then we had the composite man. Now Mr. Wyckoff said that all these big market participants, the market movers, the operators, instead of following them one on one, which is practically not possible, he said that all of them more or less function as a singular entity with a common thought process. And he said that this entity is to be known as the composite man. And composite man, he tends to win a lot more. Many people think that it is because of the amount of money that the composite man has access to, but that is not really the case. He simply is a lot more smarter than most of us and a lot more disciplined than most of us, which drove us to the method of participation of the composite man, which was through the Wyckoff market cycles, in which we have accumulation distribution. So basically looking at the simplest picture that we have is a oversold area followed by a markup distribution and then markdown. Then we went into a bit more detail about these phases. We had accumulation schematics, distribution schematics. This is what we'll be looking at today when I take you to the charts just in a couple of minutes. Now we had phases, phase A, B, C, D and E. Talking about the accumulation one, which generally is coming after a big downtrend or a prolonged downtrend in the prices. So you have phase A, B, C. A is the invalidation of the lower low, lower high. B is the new establishment of trading range or the sideways period. C is the subtle hints of changes in trend within the newly established trading range in phase B. Phase D is the visible growth of volume and the break of trading range on the upside, and phase E is a complete reversal on the upside. Now there were terms such as we had taking you into a bit more detail. We had PS, SC, AR, ST, LPS, SOS, and these things. I also told you what these terms were. So if you are still not aware of what these terms mean, I would genuinely ask you to go back and watch the previous videos again, because unless and until you are familiar with the very basic terminology, you will not be able to understand the charts when it comes to Wyckoff especially. But still, briefly walking you through, as I said, PS was preliminary support, automatic rally. We had secondary test, we had selling climax, then we had multiple selling tests within the phase. Then we had LPS, which was last point of support, followed by SOS, sign of strength, and then build up and then breakout on the upside. exact opposite is what we have in the distribution schematic. The only thing common are the 5 phases A, B, C, D and E. Instead of preliminary support, we have preliminary supply PSY. We have buying climax instead of selling climax. Automatic rally stays the same. We have secondary tests, but on the opposite side, instead of sign of strength, we have signs of weaknesses. And instead of multiple or a lot of secondary tests, we have upthrusts, where the price is trying to break that buying climax range on the upside. Then instead of last point of supports, LPS, we have multiple LPSYs, which translates into the last point of supplies, which you can initiate new short positions basically at that particular point. Then we move on to the last phase, which wherein we have a final breakdown of the trading range on the downside, which leads to establishment of a new trend which should go on. So this is the Wyckoff theory, summing it up very, very quickly. Now I have a couple of charts pre-marked for you guys, just because I think that would make it a lot more easier to understand, and it would also save us a lot more time if I were to just keep them ready and labeled rather than to label them in front of you guys. But the method of labeling, the understanding is the exact same that we had before. Now this would be a prolonged uptrend followed by a distribution schematic, and then we have a change in trend. As you can see, the script that we have used for reference purposes here is Tata Steel. We have the hourly time frame. I think that is the best time frame to perform pure price action analysis. Now as you can see, we had a very, very long uptrend. The uptrend started all the way back in May se leke what is it? It's almost August. So we had a long time of an uptrend. So it was a prolonged uptrend. So the placement of the distribution schematic fits perfectly. We had a trend reversal in the cards, and that is what has happened. Now coming to the schematics, I have marked and labeled these phases as I said. Now these are 5. The first one that you have is phase A, then you have phase B, you have phase C, which is a bit tricky to identify. You have phase D, and then complete reversal in phase E. Starting with phase A, you have the first higher high, higher low swing leg. Now the easiest way to identify this is a decline in volumes at the preliminary supply. The participation declines. As you can see, if I were to just highlight the volume after the preliminary supply, you can see there has been a decline in the participating volume. So that is the first point. Then you have the automatic rally after the preliminary supply. The high that comes after the automatic rally witnesses further decline in volume. You can say that the effort is declining, because of which the result is now going to diminish. So it's all driven by logic. Once again, if I try to highlight volume at this point, so you can see after the automatic rally, the volume started to decline, and at the buying climax there was even less volume than the one that we had at preliminary supply. Now this becomes your newly established trading range, wherein the low is the AR point or the automatic rally point or the previous swing low, wherein वहाँ से जो नया high आया, that becomes the top of your trading range, which is known as the BC or the buying climax. The only way to verify them is the dip in volumes, because that is the third law around which the Wyckoff is based, effort versus result. Effort जाएगा तो result भी चला ही जाएगा. Now this is how it goes. After you have a range, it is very, very obvious, even by normal price action analysis, the very basics ki swing high swing low break hota hai, so you have a newly established trend. Now as per the Wyckoff theory, you will have multiple retests of both AR point and the BC point. If the BC point is convincingly broken on the upside with a rise in volumes, then it is supposed to be a continuation of the trend pattern. फिर वो higher low, it will go back into that same structure formation. But if the automatic rally is broken with multiple LPSYs or last point of supplies, then you can expect a complete weakness, which is what happened here. Going further ahead from this point, once you have a range established, you should have multiple smaller structure formations within that trading range. As you can see, we had a small lower low, lower high formation within that trading range itself. If I were to just plot it out for ease of identification for you guys, even after an up move, वो sustain नहीं हुआ, it had a smaller lower low, lower high formation within that trading range. Now the second high after that becomes your secondary test, because it tried to break the buying climax but वो नहीं हुआ. and the dip wherein it try to break the automatic rally, that becomes your sign of weakness. Now from your sign of weakness, there is a possibility that it can further break the upside buying climax range if there is a sudden spike in volume, or there's a possibility that it cannot have that upthrust, it can skip that upthrust entirely and break the range on the downside after just continuing the lower high momentum. But generally what happens is the automatic rally has become such a strong demand zone at this point that there are retail participants or even small to medium scale participants who are willing to buy that stock just to ride it until the BC point or the buying climax point, or even till the secondary test, which is known as the recent LPS, or last point of supply. Now once it makes a move on the upside, it has another one. If it breaks the secondary test and it approaches the BC, which is the buying climax, then that is known as an upthrust. Now typically, as per Mr. Wyckoff, he said that upthrust ke baad you have a further dip in volumes, after which it can not really break the buying climax again. Now as you can see, upthrust ke baad we had a further dip in the volumes. This is the upthrust point, and therein again we had a smaller dip in volumes. So all of which, it seems to gel together. It is all driven by logic. After the upthrust is confirmed by a dip in volumes and you are certain कि ये buying climax का range break नहीं करेगा, then every swing low point from there on, typically if you were a positional trader or you had been riding long positions since the beginning of the uptrend, this is where you would ideally prefer to abandon your long positions. Or if you are looking for positions, new position, then every LPSY or every new last point of supply that comes on is going to be a potential short entry. And every time it interacts with the lows or near the signs of weaknesses and the AR origin points, those lows can be your new potential shorting entry points, with stop losses simply going above the previous LPSY or last points of supplies. As you can see, that is exactly how it played out on our charts as well. You had another smaller lower high formation. Again, just I'll draw it out for you. It takes a second. Every swing high from that point on becomes, as I said, your LPSY. You can either have new entries wahan pe, or you can abandon your longs. If you are an aggressive trader, you can go for entries at the LPSYs with first targets of signs of weakness swing points or automatic rally origin points. Once it breaks that point, the automatic rally ka point, once it breaks that, which is again signified by a bump in volumes, because as I said, even on the downside to make the price move, you need some effort. So as you can see, near the last sign of weakness that I have plotted, this one, you have a significant rise in the volumes from 16th September all the way till 21st of September. That signifies that the biggies, they are now starting to short it, or they have already entered their shorting positions. And this is with the poor retailers trying to push the price back high, but they are failing miserably. So this is how it works, guys. You have phase A, phase B, phase C, phase D, and at the very end you have phase E. I hope this makes a lot more clearer, but don't worry, we don't have only one chart, we have two more charts for you to discuss. Now moving on to the second chart. I hope you guys understood the chart. If you want the chart, let me know. I'll take the screenshot of the chart and I'll share it with you guys on the Telegram channel. And those of you who have asked for the PDF of the Wyckoff, that we have been discussing, the Wyckoff theory PDF, that is also going to be shared today. You can check the channel. But these charts are not in the PDF because the PDF has been made and I have lost the Word file, so I'll have to type it up again. Please don't make me do that. So if you want the charts separately, I can share them in the Telegram channel. I have absolutely no problem in doing that. Let me know if you want the charts in the comments below. Moving on to the second chart that we have. Now this Tata Steel that I discussed with you guys, this is a complete chart. This has been completely acted out. We had a high low, it went into distribution, and then it is now making lower highs. Let's see something which is currently still in formation. Now again, using the same terminologies, pretty much the same terminologies that we discussed. First of all, verifying previous uptrend hai ki nahi hai. You can see very clearly July se clear uptrend. It went from 200 to straight away 300. Now coming to the recent charts, this is again the hourly time frame. As I said, hourly, I personally have a liking for hourly. So picking up the first swing high, then which we declare as the preliminary supply. Then you have the automatic rally and buying climax. Just quickly checking for a dip in the volumes, that is confirmed. So that means that this higher high that has been made, उधर उतना एफर्ट नहीं है, तो उसका रिजल्ट भी सस्टेनेबल नहीं जाएगा. Simple as I say, always simple as I said, it is all driven by logic. Now after the buying climax, similar to Tata Steel, you had secondary test, sign of weakness, upthrust, which is again break of secondary test on the upside, and then trying to break the buying climax on the upside too. Furthermore, upthrust के बाद, I told you guys, every new swing point on the downside can be a potential short entry. Every new LPSY that we had lower point of last point of supplies can be new potential short entries. And I also told you guys, for it to break, it needs to have sufficient volume. And as you can see, niche at the time there was a increase in the volumes, so the price was falling but the participation was increasing. Now either way, it broke the trading range on the downside. The, as I said, same range, AR and BC, automatic rally buying climax, broke on the downside. It has now again approached the AR retest of the automatic rally swing point, but this time again it has already started being rejected from that swing point and is on its way down. So if I were to call it, this is your another LPSY or your last point of supply. So that is how it works. If you were using the theory right now, you could have very well taken a short position near 268, 270 with your stop loss going above the previous last point of supply, or 278, 279, and ideal targets being under the swing low of 250, 260. So as you can see, the RR is already fabulous. You are risking around 6 points for capturing around 12 to 13 points as your first and primary target. You can trail it as much as you want. Now moving on to the third chart that we have is a bit on the different side. Now phases here, so it's not always necessary that after a markup it enters distribution and it comes down again. Sometimes what happens is, after distribution phase, upthrust के बाद it upthrust में there's a spike in volume and upthrust is sustained. So what happens there is, it does not go back to new lower highs. Instead it moves back to the earlier trend of higher highs and higher lows. Also a possibility, and luckily we have an example for that as well. That is escorts, same hourly time frame, confirming the first and very basic thing, we need an uptrend previously. So I have drawn a channel just to highlight that from May to July, 3 months of uptrend, 720 to 1200. Now coming to the recent charts, again the same thing, previous preliminary supply, then you had there's a mismatch, yes, preliminary supply, then you had automatic rally, then you had buying climax. Again just confirming by the volume, preliminary supply, volume decreased, automatic rally, new high made, but that udhar bhi the participation volume was not a lot more than the preliminary supply. Then you had a newly established trading range of the automatic rally point and the buying climax. वहाँ पे the same theory goes again. You have phase A, phase B, phase C. D and E नहीं है, I'll tell you why, but वो नहीं है, अभी तो नहीं है. Now moving on to phase B, wherein the price moves within your trading range. You have the secondary test, which is the new swing low beneath the buying climax, swing high under the buying climax. Then you have the sign of weakness, same thing that we had in Tata Steel as well, and escorts, not escorts, which was it, JSW Steel, yeah, Tata Steel and JSW Steel too. You have the sign of weakness, again multiple secondary tests. I told you guys when we were discussing the Wyckoff schematics that there can be multiple secondary tests. There's nothing to worry about that, as long as it is not approaching the buying climax price range. I cannot necessarily, not necessarily, in fact I would prefer not to call it an upthrust, because an upthrust is a very strong push in prices. We have an example of this one too. So that becomes another secondary test followed by another sign of weakness. Now as you can see, the trading range is going on for a lot longer of a time period when compared to the other charts that we had, which was JSW Steel. You can see you had one sign of weakness, one secondary test, upthrust, and then new swing lows. Same goes for Tata Steel. You had one sign of weakness, you had upthrust, and then LPSYs. But in this case, you had multiple sign of weaknesses and multiple secondary tests before your first upthrust. What that means is neither the buyers nor the sellers are willing to give up at this point of time. Now once you have an upthrust, as you can see, even the upthrust on this one was a lot stronger, and at the upthrust you had a very big spike in the participation. As you can see, the entire trading range was more or less of the uniform volume, but at the upthrust you had a very big spike in the participation of volume. In participation, that is reflected through volume. Now after the upthrust, every swing point is reflected as the LPSY. Now generally, after you have an LPSY, it is supposed to be further increase in volume followed by the price going on the downside, which signifies that the trading range is now going to be broken on the downside. The cause is not the cause, but the effort is increasing, because of which the result, which is going to be the price moving in downside aggressively. But वैसा नहीं हुआ. After the LPSY was taken out. As you can see in the previous charts, LPSYs are not taken out with an increase in volumes. LPSYs are never taken out with increase in volumes. If they are, then you need to be a bit more cautious. As you can see, if I consider the volume at the last point of supply and then the volume when it was taken out, that is a lot more. That is almost 2.5 times the participation that we had with respect to the people selling at the LPSY. So at that point, it even reached the upthrust level at with that up move. So that signifies that the sellers are not really there, which means that the composite man action that we are looking for, that's not really there. So instead of calling this to be a breakdown, that becomes a build up. If you are familiar with the Wyckoff schematics, we had a build up in the accumulation side of things, where you have swing point that is taking out previous swing point, which is further confirmed by the increase in the participation. After the build up, every pullback now becomes a SOS, or a sign of strength, instead of a sign of weakness, or SOW. As you can see, sign of weakness pe you have more or less stagnant or bekar volume. Instead, sign of strength pe you have spikes in volumes. Same way, if I compare the volume at the sign of strength, again you have a spike in volume. After a sign of strength, the range is broken on the upside. Then instead of it transitioning back into lower low, lower highs, it is now transitioning into higher highs and higher lows, which was visible in, as you can see on the chart here, for a couple of days. But now again the participation has decreased. As you can see on the chart, if I show you guys, the participation has decreased, which means that the faith of the biggies is not really there on this chart. So this is a bit more skeptical. Now to go long on this one, how to deal with this one is you take a proper confirmation of volume. To go long on this one, you need the BC, or the buying climax level, which is 1210, to be taken out with strong volumes, or you need the previous sign of strength level, which is 1160, to be taken out with again strong volumes. If that is taken out, then you can again plot this same similar schematic on that one there, and you should be able to reach to a conclusion. So well, this is how you perform the Wyckoff price analysis, or the Wyckoff structure analysis. It might seem a bit complex, it might seem a bit lengthy, but once you get used to it, it is very powerful. It is a very strong concept. So I would suggest you guys to genuinely give some time, some thought onto it, and even try to club some concepts such as preliminary supply, preliminary support, automatic rally, buying climax, selling climax. These are small things, or how to identify a trading range with respect to volume and participation. These small things, even if you chop the Wyckoff theory in parts and try to implement it in your system, it is going to help you a lot, and it can totally turn your trading style around. So try your hand on it. Definitely, if you have any doubts, you can always ask us in the comments below, or on the back support channel, which is @Apex back support. If you are with us on Telegram, if you have been with us on Telegram, you'll be familiar with that one. Now this marks the end of the Wyckoff series of things, and we'll be back the next weekend with something new, and hopefully something even more interesting. Till then guys, stick around, watch the daily analysis videos, share your analysis with us too, and if you are actually taking some trades, even with confirmation of your own, let us know. It does feel good when we actually end up making some money together. I hope you guys have. I hope you guys not have. It is already Saturday night. I hope you guys have been having a fantastic weekend, and I'll be back tomorrow with the weekly, or not weekly, daily analysis for Monday's trading session. Thank you so much for watching, guys. And if you liked the Wyckoff series or the structure analysis series, don't forget to like, share, subscribe to the channel, and share the video too. It might as well help some trader friends of yours. Comment something nice and press that bell notification icon too. Thank you so much for watching, guys. Have a good night. Bye.